Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 8th of January 2019. I'm Darren Sinden. You can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. A relatively quiet session on the world's foreign exchanges yesterday, and really it was a story of dollar pushback, the dollar making gains in the majors against the euro, against the Aussie dollar, against the Kiwi, and also the US currency making gains in the emerging markets, adding 0.23% against the Chinese yuan, and bigger gains against both the Indian rupee and, interestingly, the Brazilian real, which of course itself has been very strong over the last couple of weeks. Dollar index for its part was up by 0.12% shortly before we recorded the video, trading at 95.78, but of course that's still below that 96 handle. The dollar also made good gains against the South African rand yesterday, adding 0.5%, and dollar rand trading at 13.9322 shortly before we went live with the video. Okay, what's on the calendar? Events that may move the markets today. No high impact data today per se, but still a pretty busy calendar. We've already had job advertisements and trade balance data out of Australia this morning, alongside consumer confidence index data for December out of Japan. To come at 7 a.m. we'll have industrial production data out of Germany month on month and year on year, and that'll be followed at 8:30 by the Halifax house price index data out of the UK again for the month of November. We jump forward then until 10 a.m. for Eurozone business climate, economic sentiment, industrial confidence, consumer confidence and services sentiment data out of the Eurozone. A real chance to get a handle on how European businesses are feeling about at the moment and looking forward. 11 a.m. sees us jump over the Atlantic for the NFIB Business Optimism Index out of December, so some more business sentiment data there, this time out of the States. And then at 13:30 we should have trade balance data for November out of the USA, alongside a similar data from Canada. 13:55 we should have the Red Book Index for the week of January 4th out of the US, and that'll be followed at 1500 by the JOLTS job openings data for November. At 1800 tonight we shall have a 3-year note auction out of the USA. Be interesting to see how the market funds that bond auction and what they're thinking perhaps about the US government shutdown and the US economy. And then at 2000 hours GMT we shall have consumer credit change for November out of the States, followed at 21:30 by the API weekly crude oil stocks update for the week of Jan 4th from the US, and at the same time the AIG Performance of Services Index data for December out of Australia. Okay then, breaking news and comment that's caught my eye overnight. And first of all, FOMC member and Atlanta Fed President Raphael Bostic sees just one rate rise in 2019, he revealed in a speech last night, despite an improving US economy. He noted that business confidence was weaker among his circle of contacts. It's interesting to hear that from a voting member and someone of his stature, and to note that he doesn't just rely on hard data to form his opinions around the future path of interest rates as he's concerned. Meanwhile, the North Korean leader Kim Jong Yun visits China for 4 days at the request and invitation of President Xi. It's apparently Kim Jong Un's birthday today, although he hasn't officially confirmed that. The EU and the US are to hold trade talks in Washington aimed at reducing tariffs and other barriers to freer trade between the two countries. You remember that the two countries imposed an embargo on further tariffs back in July, although interestingly these talks today are not meant to include the subject of automobiles. And the president of the World Bank, Jong Yun, has resigned unexpectedly. Donald Trump may now get to appoint his successor. Right, food for thought, something to take away with you into the trading day and beyond, and why not think about this? Electronics conglomerate Samsung has warned on profits from its chip division overnight, citing slower mobile phone sales and rising competition in the sector. This is the first dip in profits from the division for 2 years. And that warning comes as US investment bank Morgan Stanley has warned of a sector-wide revenue contraction for global chip makers. And that suggests to me that Apple may not be the only big tech name to suffer in 2019. The chart to the right-hand side here is a chart of the Philadelphia Stock Exchange Semiconductor Index, or SOX as it's known. As you can see, that was declining quite strongly across the autumn and into the winter months of 2018. 18, we had a rally into the new year and then sold off again on the Apple profits warning, but we were just starting to recover. It'll be interesting to see if this benchmark of chip maker manufacturing stocks can rally further, or whether that Samsung news will force it back onto a lower trajectory. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take a moment please to read this risk warning thoroughly. Thank you for your time today.